Welcome back to new market update, second week of December. My name is Mo, a trader and a system builder, over 10,000 hours in the live market, tested over 100 plus indicators, and built my own dashboards and tools. The most important thing for today is we're gonna look at couple of datas over here. First of all, Bitcoin, we're gonna watch it, what's going on, and the bubbles, and where the commodity market is, and how's the small cap in the S&P 500 and in the US looking like, and the most important thing, where the risk on and the risk off in the market is, and what the institutional traders and the dark pools are doing. That's being said, let's dive straight forward. The first thing we want to watch over here, the VIX volatility. What is telling us is telling us a very important story. As we said in previous video, if we reach around 15, which is usually our, it tends to go up. And we see the first jump over here when we see this over here over weekend under Friday close, right? If we went down lower on the Friday for hourly charts, we see clearly some reaction over there. But if it goes to 13s, is potentially very likely to go higher. But majority of times, as you see, it remains in that range, right? It remains in that range. Let me mark it for you, right? It remains in this range and is ranging. Basically, is ranging. But will it go higher? What does it mean if it goes high? When it goes high, the S&P 500 go lower. When it goes low, the S&P 500 go higher. So the most important thing is where the market is going after the Fed has cut rates. And I think the chart over here is explaining it, why those rate cut is happening. In 6 months, Jerome Powell leaving the chair of Federal Reserve and Trump has shown a very significant interest in the market itself and the position of Federal Reserve to be more dependent and to take control of it, and the dual mandate employment and inflation, it could change to more paying the debt we have in the US. Around 8 trillion debt in 2026 need to be paid, which is a lot in comparison to all other years. Is this incredible number, and somehow you need to pay it. And of course, when the printers goes on, the inflation happens. So they are printing from thin air the money, and the money is just decreasing in the bank if you have it. So the cash is not that king in that case. Will it happen? We have already seen this year's three cuts, and it's going on. That's being said, let's watch a second chart over here. Is this crypto itself, how the crypto currencies over here is positioned overall. We see very confusing states. A lot of people don't know what to do, to go short, to go longs, and everything between. So we see a couple of skewness in it. And over here we see a couple also mav and other coin forks, which is has shown significant interest in the bullish sides, but overall we in the center the people are confused. That's being said, we can see over here the institutional traders on the Bitcoin side is still remain bearish. So they has been selling and the dealers longs is decreasing. So they has not shown interest in buying it back. But overall, this chart should explain it much better. When we see in 2022, 2018, and 2020, 2014, we have seen in the midterm of the year a significant correction, and those corrections happens. And 2026 is going to be very important one. Will we see that correction based on those data? It seems more likely to happen. That's being said, the most important thing is to watch when it's coming to those data, the IBIT, the BlackRock ETF, when it's coming to Bitcoin itself, how much inflows going into ETF minus the outflows and the net position. Based on Fidelity chart over here, last updated in 2025, we see very clearly it's going higher, and we has seen similar reaction in the latest 2025 when tariffs came in March and February and January over there, where Trump talked about those tariffs and increasing tariffs by 150%, 300, etc. Right? And are we going there? Potentially possible. Everything is possible. Let's see what is probable. Based on the VIX over here, we want to dive also into the dollar index. What the dollar index telling us also is an important story. As we said, dollar index is going lower. We said we're gonna want to see a reaction around 898 over here, but clearly we got rejected, no reaction. So this scenario is declined. So in my opinion, the S&P 500 right now, it could rise higher, and doesn't mean, despite the bubbles and the situation currently going in the market, when we watch this chart over here, we see clearly the market, the net position of investors in the US is saying it is US stocks are overvalued. 91% of investors saying that. And also the net of investors saying the emerging market is undervalued by minus 49%, which is crazy numbers. So people are saying it is overvalued, the SPY, the SP 500. But despite that, we see clearly when we go to the daily chart, we see clearly how it's rising crazily. We see it is rising very heavily. And this rise has been very significant since 2025 over here. We see those corona crash, and in 25 over here we see the tariff crash is started somewhere from here. Let me pull the data out for you. January somewhere here, and we done another 20% on top of it. If you were long short portfolio manager, you would have seen a certified correction from here up to here, even more, 44% exactly, based on the break even low. So we see 21 and correction, and to the upside, we see 26% to get to the break even. That's being said, we see clearly we're still pushing higher and higher. We're seeing some significant decrease in interest. Let's add a couple of volume over here. Let's add our charts. On the right side, we have visible range. And right now, we're still below those 200 moving average and still is bullish on a daily charts. Our RSI is printing couple of sell signals and we are decreasing, right? So what does it mean for us? We clearly over here, we see on our charts, the visible range is saying a clear resistance level, right? Let's write R for resistance or resistance. So we have a resistance over here, and we have, let's also add, be more specific, visible range, value area high, and resistance, you write it differently. So, and we have another POC over here in the middle. We want to also take that into consideration. So, and POC, and let's add those moving averages also. To be exact, that's gonna be the 75, I think, on my chart. The 20, the 50, 100. It is the 100 moving average over there. So majority of people who are watching those moving averages on the institutional sites, they are watching the 50 and the 200. So I like to add the 100 and the 20 for faster moves based on which time frame currently I am at. We can see clearly over here. So we saw it already over here, a support from the 100 moving average? Will we see another support from the 200 moving average over here down below, which is much stronger level, in my opinion, to see support over there? Because we have two things: we have volume weighted average price plus a high node of the visible range. Of course, if you don't understand any technical words, don't overcomplicate it. You don't need those everything to be complicated. You need only three things. You need price, you need volume, and different shapes of combination of the price and the volume. So you can have order flow, you have volume profiles, you can have volume itself, you can have MACD, you can have RSI, and always keep in mind you need a confluence. We need a stack of information, not only relying on one side of information, because it's going to be not easy. If you go to YouTube, you're going to see those triangles making and telling you it's going to be the direction. But the most important thing is what the price itself and the volume is telling us, not the triangle. Triangle is one confirmation. The second confirmation going to be the volume. Third confirmation going to be the RSI. The fourth confirmation is going to be the price. The fifth confirmation is going to be the sentiment in the market. When we talk about fear and greed, I want to show you a something over here, which is also piquing my interest. So recently, the fear and greed index was around very extreme fear, which is majority of the time is indicating for the bottom of the markets. Is it going to be this time the same? Is this very interesting question for me, because each time happened, it was very reliable indicator to tell us the bottom of the markets. The same for crypto, but for the first time, crypto and the S&P 500, the US stock, has decoupled in terms of correlation. So, which is very interesting. If this happens based on the Fed decision, will the market macro it shift? So the first macro shift is happening in 2026 when Jerome leaves and the mandates focus changes into printing more money so they pay the US debt. And the second thing is macro shift, is Bitcoin decoupling from the US market. This is going to be very significant for us to know that in the couple coming weeks. So let's continue over here. We have also 200 moving average. We want to add that too, so we know exactly very beautifully what's going on. So what we have else over here, volume seems to be a little bit decreasing, but nothing much interest on the Friday. Friday close is when the Friday is red, the Monday is green. Majority of the time with 61% probability. So so when analyzing those things in crypto, right, or overall in trading, you need to have a combination of math, logic, statistics, and price action, and a lot of eye training, right? So majority people who is coming to trading itself, they don't take it seriously. It is a business, and you go to university, you make a degree, takes you 4 years, and you expect from trading after 2 weeks to be a profitable trader and make thousands and buy your Lambo. It is not possible. So you need a lot of skills. I think the hard thing to do in life is trading, because you need to be psychologically at your peak points and understand yourself like nothing else, understand your emotions, and be very personally, expressionally, emotionally compatible person and very mature. That's being said, second thing is you need to understand those data and be very curious. You need to be curious like a child and ask always the right question when it's coming to stock market, to crypto markets, and ask the important question, not the should I buy, should I sell? Is it more why should I buy right now? What should I sell? What is speaking for? What is the contra? And the other side positions. And more about that is the thing, how to combine all of them and how to weigh each component correctly, right? So if the price is telling you a story and the macro economy is telling you something else, right? For instance, right now the macro economy, it could be doing great, right? And the US is doing great overall, but despite that the market is going down. And the same, which is the current situation, is the economy doing a little bit worse and the market just pushing higher and higher, which is very interesting. So economy is a delayed matrix of the stock market. Stock market not equal the US economy. So the behavior of human psychology is in the stock markets, how they see it. And that is very important to understand. So we have marked our data. And right now, let me pull a couple of alerts for myself over here. So I'm doing live analysis with you over here. So you can see my system and my logic behind it. And we want to move those take profits. We already done them. Let's clean the chart a little bit. We don't need to overcomplicate ourselves. And we have done everything perfectly. So right now, I want to see this area over here. This is going to be a very strong buy for me also. Strong buy area. So every analysis I'm doing over here is my own opinion and is not financial advice. Always do your own research, and there is ton of way you can make mistakes, and is always involved with risk. So I have been doing it for the last 7 years, and I have invested 10,000 hours to be at this level. So please, if you don't know what you are doing, seek a financial advisor or ask me in the comment any technical information you like to know. So let me delete this. So we have done this. Let's go to the Bitcoin level sites. So on the Bitcoin, we still see clearly some rejection over here. Are we still in our ABC correction? Let's add our indicators over here to see the full view over here. So it is nothing much, right? It's not telling us a lot. We're still in that area. The same for Ethereum, I would say. Ethereum is doing the same. But let's watch also what over here we have another smart retail trader. So retail trader is right now is selling. This means is going to be pushing higher. So that's the thing is over here. When I see the retail trader is are selling it, right? This is telling me the story that majority of the time the institutional traders are buying. So I would consider based on this alone a hedge position against my shorts. So we have potentially of going higher on Bitcoin over here. So why I'm thinking about that, because we saw a lot of correction over here, 36%, which is not unusual for Bitcoin as a volatile asset and risk on asset, but at the same time is still a lot. So let's check out the moving averages over here. It seems to be very clear that we're still in oversell. So I could see the markets going lower over here, but not necessary. So let's add a couple of alarms there. And let's zoom in on seasonality down below. So the seasonality itself doesn't tell us any story. So that's more than enough. For right now, we seeing potential of sell on the US side. We see potential buy on Bitcoin. And overall, institutional traders are not interested in Bitcoin. People are confused. Fear and greed is telling us another story, but and the bubble itself is telling us another story. And this chart I wanted also to share with you is the micro caps, right? The micro caps, sorry. The micro caps is looking to like it is all-time high, right? We have reached our all-time high. Will it do a correction and make a cup, right? Just look like a cup correction, going higher than lower than continuation. That's being said, we want to see also what the dark pools is doing. We see a lot of dark pools is going into the market. The volume leaders over here is telling us the IVV is a lot of dark pools happening, but it's not telling us in which direction it is. Is it going to be higher? It's going to be lower. We are not sure. Like a couple of weeks is gonna tell us the full story over here. The thing I want to share with you is the stock market cyclical, right? So you need to understand the peak of the cycle and the economy. Those are two things. The stock market is one thing, the economy is another thing. So one of them is delayed, and one of them is forward looking, but not always like this. That being said, keep in mind is that stock market itself moves in waves. So it goes higher highs, lower lows, right? So we can see waves clearly in the stock markets, and you need to understand that very well because our human psychology is playing a crucial role over here. When we buy something high, for example, Apple stock for $100 and goes down to $50 and you lost $50, it's very painful. It could be that it's a cyclical move, and it's going to be continuation on all those fundamental technical analysis and all the gurus and YouTubes, etc., which not telling you that it's moving in cycles, and your psychology is playing a crucial role in trading itself. Why is that important? You need to understand which emotion and which bias is currently influencing you, such as confirmation bias, loss aversion bias, and gambler fallacies, and ton of other biases, sunk cost fallacy, etc., and all those information playing into your mind without you knowing. Why you are not knowing that? Because you lack the education, first of all. Second of all, is a lot of information and analysis paralysis in trading itself, right? To figure out which indicator are best for you, which time frame are best for you, when to trade, when not to trade, which asset to trade, who to trust, where to watch, where to learn, how much. Majority of people don't want to pay even for trading because due to a lot of trading education, due to a lot of scammers in the industry itself. 90% of people are scamming, and they are just educators and not traders. So one thing I want to leave today is and end it with conflict of interest. Always watch who has conflict of interest, who has your best interest and who has not your best interest. Such as brokers want to take your fees. So each time when you trade, they take a fee. Each time you trade, they take the opposite position, whatever. And educators, each time you buy their courses, they're also connected with the brokers. Each time you lose, they get a portion of it, and you buy their courses, and they get money also from YouTube, and so on. So always think about conflict of interest, who has your best interest and who has not you in his best interest. That being said, leave a comment, share, and like if you like this video, and see you next time with much more content, with a lot of education content. And the most important thing is stay safe and always manage your risk. That's being said, leave a comment down below and tell me what next should I talk about.